Hi and welcome to our in-depth analysis of the Nippon India Growth Fund. In this video, we will provide you with a comprehensive understanding of this mutual fund, from its basic details to its investment philosophy and risk factors. The Nippon India Growth Fund is a popular mutual fund designed for those seeking long-term capital appreciation through investments in quality stocks. Let's start with the analysis. But before that, let me introduce ourselves. We are PA Wealth, a SEBI-registered investment group. We offer stocks, mutual funds, portfolio management services, alternative investment funds, insurance, and startup investments. Every week, we upload research videos on different companies, mutual funds, and financial topics. To stay up to date on the latest trends and insights, subscribe to our channel. Let's start with the basic details. The Nippon India Growth Fund is an open-ended equity scheme. It was launched on the 8th of October 1995 and started on the 8th of December 1995 and currently manages assets worth approximately 19,247 crores. The net asset value as of the 16th of October 2023 stands at Rs 2,777. Let's take a look at the classification portfolio of the fund. This fund falls into the equity category, and more specifically, it's classified as a mid-cap fund. This means it primarily invests in mid-cap stocks but also has bought into large and small-cap stocks. First, let's take a look at the portfolio mix by market cap size. Regarding portfolio composition, large cap accounts for 23.5% of the total composition. Mid-cap accounts for 57.8% of the total composition while small and other accounts for 16.8% and 1.9% of the total composition of the fund respectively. Second, the top 10 holdings of the fund. Here are the top 10 holdings of the Nippon India Growth Fund, in which Cholamandalam Financial Holdings, Power Finance Contribution and O Small Finance Bank are the top 3 holdings of its portfolio. Third, the top 10 sector exposures. The fund is exposed to various sectors. Here's a breakdown of its top 10 sector exposures, in which financial, services and healthcare are the top 3 sectors, while the fund has also exposures in other sectors. Now, let's take a look at fund managers and their tenure of managing the scheme. The Nippon India Growth Fund is managed by experienced professionals. The current fund managers are Rupesh Patel and Sanjay Doshi, who has been managing the scheme since January 1, 2023. Rupesh Patel has worked with Tata Asset Management Limited, Indiarit Fund Advisors and Credit Analysis and Research Limited. He has a Bachelor of Engineering in Civil and an MBA in Finance from Gujarat Technological University and NMIMS Mumbai, respectively. Sanjay Doshi has worked with RNLAM, Macquarie Capital Securities India, and JP Morgan Services. He is an ACA, MBA Finance, and has cleared CFA Level 3. Both fund managers have a strong track record of performance. The Nippon India Growth Fund has outperformed its benchmark index in the long term. Now, let's take a look at the investment details of the fund. The Nippon India Growth Fund is a mid-cap mutual fund scheme with a minimum investment amount of 100 rupees for both lump sum and SEEP investments. There is no lock-in period for this fund, but an exit load of 1% is payable if units are redeemed or switched out on or before completing 30 days. Now, let's take a look at the returns generated by the fund. As you can see from the table above, the Nippon India Growth Fund has outperformed the Nifty Midcap 150 index over the past 1 year, 2 years, and 3 years with 33.33%, 13.93% and 33.38% returns respectively. You can also see the performance of other funds of the same category as compared to the Nifty Midcap 150 index. Now, let's look at the various risk factors associated with the fund. First, valuation measures. This table shows that Nippon India Growth Fund has a higher mean return than the S&P BSE 150 midcap, but it also has a higher beta but lower standard deviation. The Sharpe ratio and Sortino ratio both show that the Nippon India Growth Fund has a higher risk-adjusted return than the S&P BSE 150 midcap. Second, let's take a look at the top drawdowns. Here is the historical drawdown chart of the Nippon India Growth Fund. It gives you insights into how the fund performed during market downturns. Now, let's move on to the investment philosophy. The Nippon India Growth Fund invests in medium-sized companies that are growing quickly and have the potential to become leaders in their industries. The fund focuses on 4 sectors that are expected to grow faster than the economy as a whole. The fund's investment team picks stocks based on their research, without any bias towards a particular investment style. Now, let's take a look at the taxability of earnings. First, capital gains taxation. If the mutual fund units are sold after 1 year from the date of investment, gains up to Rs 1 lakh in a financial year are exempt from tax. Gains over Rs 1 lakh are taxed at the rate of 10%. If the mutual fund units are sold within 1 year from the date of investment, the entire amount of gain is taxed at the rate of 15%. No tax is to be paid as long as you continue to hold the units. Second, dividend taxation. Dividends are added to the income of the investors and taxed according to their respective tax slabs. If an investor's dividend income exceeds Rs 5,000 in a financial year, the fund house also deducts a TDS of 10% before distributing the dividend. That's it for today. I hope you found this video helpful. If so, please give it a thumbs up and subscribe to our channel for more research-based financial content. In the comments below, let us know what topics you'd like us to cover in future videos. Thanks for watching.